Hello friends, good morning. Myself Pranjali Shah, Derivative Analyst, Anagram Capital Ahmedabad. Here I present our view on rollover to this series and outlook for the series and outlook for the week also. Lower rollover is seen in Nifty, which suggests upside appears limited. January series is beginning on relatively lighter note in comparison with previous series. Leverage positions are lower in value terms at 99,451 crores versus rupees 1,15,037 crores at the beginning of December series. Rollover to January series are a significant lower for index, with Nifty's rollover at just 61% versus 75% in the previous series, whereas last 3 months average is 72%. Market-wide rollovers to January series are in line with previous months and 3 months average of 85%. In value terms, Nifty open interest at the beginning of new series is rupees 62,838 crore versus rupees 73,712 crore, which is sharply lower by 14.75% than the previous series. Stock future open interest has witnessed a drop of 6.58% in value terms in comparison with previous series. New series is starting with rupees 34,773 crores. Stock future open interest as against 37,220 crores at the start of December series. Volatility index fell by about 21.31% through previous series, now at 17.02% versus 21.63% at the beginning of previous series. Sector-wide rollover, sector like sugars witness higher rollover of 90%, whereas lower rollover were observed in sector like technology, which is at 76%. On FII front, if we see, index future witness lower rollover at 62% versus 90% in the previous series. On the other hand, rollover in stock future were mildly higher at 89% versus 86%. Sectors like sugar, construction, engineering, textile have seen higher rollover to the new series, whereas FMCG and fertilizer sector has witnessed rollover of 82%, which is significantly higher than the previous month's rollover of 77% and 3-month average rollover of 79% and 80% respectively. Technology and metal sector have witnessed a much lower rollover of 76% and 79% respectively in comparison with previous month, suggestive of cautious approach by players on this sector. Fertilizer and cement sector also have witnessed higher rollover to new series in comparison with previous month. Lower open interest in Nifty options segment, which is put writing, is seen at 5800 levels. January series is starting on significant lower Nifty option open interest of 7.94 crore shares as against 10.05 crore shares in December 2010, about 21% lower. Concentration of open interest is observed to be more at Nifty 6000 and 5800 puts and Nifty 6200 and 6300 calls, suggesting markets evenly poised in the broad range of 5800 to 6200 for Nifty at the start of January series. This is indicative of very strong resistance for Nifty in the range of 6150 to 6200 on the upside and the strong support existing at 5800 level in the near term. Outlook for January series is cautious advancement likely. As anticipated, December series witnessed a considerable downside in the first half and smart buying towards end of the series to give positive close. Nifty advanced by about 5.21% through the series despite negative news flow and FII's profit taking. However, despite advancement in index, new series is beginning with comparatively lower open interest in value terms at rupees 99,451 crores. In quantitative terms too, new series begin with about 9.63% lower open interest than the previous series. This is indicative of lower confidence among players about sustainable uptrend. This was also reflected in significantly lower rollover for index future, 61% versus 75% in the previous series. Overall rollover to January series, although are in line with previous months and 3 months average of 85%, open interest in quantitative terms at the beginning of series is about 9.6%. Very clearly, players seems to stay lighter for a series, which may witness heavy swings due to political news flow and Q3 numbers from corporates. In all probability, new series is likely to begin on optimistic note. However, an upside appears to be limited. Action is likely to be more stock specific with sugar, fertilizer, cement and textile sectors in focus. Outlook for the week is cautious advancement likely. As anticipated, an expiry week remained positive and December series, despite negative news flow and FII's profit taking, managed to close with significant gains. On weekly basis, Nifty posted modest gain of 123 points and closed 2.04% higher at 6134.50. Leverage positions are comparatively lower at the beginning of new series. However, significantly lower rollover for index future, which is 61% versus 75% in the previous series, are indicative of lower confidence among players about sustainable uptrend. New series has begun an optimistic note. Opening day of new series witnessed addition in open interest of 10.06% in value terms and 5.44% in quantitative terms. Nifty future January closed at substantial premium of 20 points to the spot. This suggests fresh buildup of long positions. However, keeping in view lower index rollovers, and upside appears to be limited. Action is likely to be more stock specific with sugar, fertilizer, cement and textile sector in focus. In the coming week, action in markets is more likely to be driven by global cues and FII's action in domestic market. Going by option distribution pattern, markets are likely to remain in the range of 5900 to 6250 in the coming week, with the action more specific to the individual stock. Thank you. Have a fabulous trading week ahead.